Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So you can see on the daily chart, overall picture barely has changed, so we see some minor attempt to go higher here, but it is not broken yet overall bearish patterns that we have. So actually, while market stands below this top as we discussed recently, its butterfly is still valid and market keep chance to complete this target. From the other point of view, from the probability perspective, this is chances on that stands a bit higher than an upward continuation just because of existence major support areas. And hardly market starts any meaningful upward action until it will complete major destination point. Not only the butterfly here, but mostly this XOP, as you can see, this initial ABCD pattern right on the top and has not been completed yet and stands very close. It's right here, 1670. And what's more important, 1643, it's actually OP of the large ABCD pattern on the weekly chart. So that's actually what we're watching for. Speaking about this recent upward action, mostly it was supported by the interest rate action. So we could see on the interest rate performance, this retracement to the downside in the yield. But potentially, as you understand, this is a bullish pattern. So and despite that we see the pullback here, right, you could see that market actually has formed a garbage triple 2 buy. So completes equal ABCD. And here on the 10-year treasury yield, you could see this also stands at the 618 support, around 618 level. So despite that market is moving lower, it is forming the bullish pattern. Here we do not see a really big sell-off, some big collapse, and overall retracement stands gradual and potentially, well, not the fact yet that where stands in a reversal. So potentially the market could just continue upward action as well. So that's why, as we have warned today about euro currency, despite it shows really good intraday performance and it still could move higher, but we call to be careful and don't be overestimated the recent rally, because important technical moments point that reversal could happen at any moment. So the same story in the gold. Yes, we see some upward action supported by the retracement of the interest rates, but interest rates are forming bullish pattern, and it means it put the shadow on the upward action on the gold, and it means that gold upward action could be finished at any moment as well. So from that standpoint, we should be careful to any bearish signs that's forming on the gold. So on the 4-time frame chart, actually that's the level that we need to keep an eye on, because until market stands below it, keep chance to go lower and hold, keep valid bearish patterns, as I said. And in fact, the major, more or less significant major resistance level stands only on 1762. So because all other levels have been broken already. On the hourly chart, currently market shows some signs of weakness. So I'll take a look. We haven't got any double repo recently on the 4-time frame chart. Once we will keep an eye on whether we'll get the chance to go short somewhere in this area, but no double repo pattern has been formed. And thankfully, you could see the market just continue to move higher. Currently, we have divergence in place. Butterfly has been completed, and market forms kind of the 1:618 ratio that's very typical for the hand and shoulders. So potentially the pattern that we could keep an eye on could be the hand and shoulders. That will happen in the case if interest rates will turn up again, and triple to buy patterns indeed will become the bullish pattern. And in this case, gold market could drop right back down to the 1720 and start to form the hand and shoulders. So we call bearish traders, don't run ahead of the train and just sit on the hands and wait for a clear reversal shape. because potential of this trade rather significant. It's more than or around $100 per contract, and it's not necessary to take the lots of risk in trying to anticipate the market reversal and get some gain around $10-15 to take position earlier than the market will form the pattern. For instance, if you're jumping in here, you do not have the pattern in place, but when you will get it, you will take the position somewhere around the top of the right arm. That will be 1730, 1735, which stands actually at the same points, but you will get absolutely different picture and different confidence level. From that standpoint, I do not see any reasons to be hurry with taking the short position, and it will be better to sit in the hands and wait what will happen. So, for taking the long position, in general, guys, as you know, we are mostly haven't considered any significant longs with this most recent action, except at this point, and we mostly treat this as just a pullback, and we believe that market has to show the significant swing down. From that standpoint, well, currently we do not see good bullish setups on the gold market, especially on the background of the situation on the interest rates, and we do not consider any long positions by far. So mostly currently we're watching for the bearish signs and wait whether the market will form the reversal pattern on the hourly chart or not.